Welcome and thank you for joining us in this webinar entitled United Arab Emirates Banking and Finance, organized by the UAE Singapore Business Council, better known as UAESBC. Good afternoon to those of you connecting from Singapore, and good morning to those of you who are logging in from the UAE. First and foremost, let me acknowledge our VIPs in attendance today. Mr. Li Yishan, Chairman of Business China and Patron of the UAESBC, Dr. Brian Shager, President of the UAESBC, distinguished guests, ladies and gentlemen. I am Noor Kwek, founder of NQ International Private Limited and member of the UAESBC. It is my pleasure today to accompany you throughout the webinar as your MC and Q&A moderator. If this is the first time you're attending an event organized by the UAESBC, welcome. The UAESBC is a business organization registered under the Singapore Registry of Societies, established on the 22nd of March 2018 by the founding president, Dr. Brian Shager. The council is made up of companies and individuals who are or aspire to be part of the Singapore-UAE business nexus. In February 2019, during the official visit of the current UAE President, His Highness Sheikh Mohammed bin Zayed Al Nahyan to Singapore, the UAESBC received a specific mention in the Singapore-UAE Comprehensive Partnership Agreement signed both by the UAE and Singapore governments as a B2B conduit to facilitate trade, industry, and investment between the two countries. The UAESBC actively conducts various events, including talks, workshops, conferences, and trade delegations that inform and inspire members and the broader business community in their globalization aspirations, with a focus on the UAE and GCC markets. For more information about the UAESBC, please visit our website at www.uaesbc.com. Ladies and gentlemen, this afternoon, the UAESBC is pleased to present to you our first webinar with a focus on the finance and banking sector. The aim of the event is to provide you with a practical understanding of the UAE banking and finance sector, the key regulations and agencies within this sector, as well as to provide you a glimpse into the spectrum of financial activities carried out in the country from actual practitioners and experts in the sector. We are pleased to feature in this webinar a distinguished lineup of speakers representing key agencies in the UAE in the sector, as well as a Q&A panel discussion with senior experts from established financial institutions in the UAE market. For more information about each speaker and panelist, kindly click on the link to the event website, which we will share with you in the chat window now. We will present today at the opening the remarks which were meant, unfortunately, to be given by the guest of honor, His Excellency Jamal Al-Swaidi, UAE Ambassador to Singapore, but he is unable to join us today. Ambassador Jamal has requested Dr. Brian Shager, President of the UAESBC, to read the speech on his behalf. It is therefore my pleasure now to invite Dr. Brian Shager onto our screen. Dr. Brian, please.
Thank you very much, Noor. As explained by our moderator and MC Noor, His Excellency Jamal Al-Swaidi, the UAE Ambassador to Singapore and patron of the UAE Singapore Business Council, has tendered his apologies for being unable to join us at this webinar due to some unforeseen development at the 11th hour, and has asked me to deliver his opening remarks. Your Excellency, Mr. Lee Yi Shan, Chairman of Business Singapore, Business China, and patron of the UAE Singapore Business Council, the EXCO, the UAESBC, distinguished guests, ladies and gentlemen, a very good afternoon. My apologies for being unable to be with you due to unforeseen developments. I am delighted to deliver my opening remarks to Dr. Brian Shager, President of the UAESBC. The finance sector is an important sector for the UAE, contributing more than 6% to our GDP. Last month, the Dubai International Financial Center, or known as DIFC, was included among the top 10 global financial centers in the Bankers Magazine's annual International Financial Center rankings. The Dubai's position as a global destination in the digital economy and virtual asset sphere became apparent when this year the Emirates established the Dubai Virtual Assets Regulatory Authority for businesses related to virtual assets, including crypto and non-fungible tokens. In Abu Dhabi, the Abu Dhabi Global Market, or ADGM, was established in 2013, and at that outset stated its main objective to create innovations in the fintech arena. The post-pandemic era, the CFA Institute reported in April this year that trust in the global financial services sector reached an all-time high, with UAE coming in second at a 78% level of trust in the sector. Therefore, I believe that it is indeed timely for UAESBC to organize this banking and finance themed webinar. In addition to DIFC and ADGM, I'm delighted to note that the participation of First Abu Dhabi Banks, the largest UAE bank, is actively involved in presenting at the seminar, together with the largest law firm in the Middle East, Al Tamimi and Company, which is also presenting in the seminar. And I'm sure that they will be able to give you a good overview of the banking sector, including its regulatory framework. I'm confident there will be an interesting and engaging panel discussion as well, featuring the leading institutions and experts in the banking and finance sector, namely DBS, Bank of Singapore, HSBC, Lulu Financial Group, and Anson Zeal. Hence, I'm sure you will find this seminar both enlightening and informative, and I thank you for your participation. Back to you, Noor.
Thank you very much, Dr. Brian. Ladies and gentlemen, before I invite our speakers to speak, please allow me to explain to you our Q&A guidelines. As you can see from the program shared in the screen right now, the event will begin with 4 presentations by speakers from First Abu Dhabi Bank, Al Tamimi and Company, ADGM, and DIFC. Each presentation will be followed by a 5-minute Q&A with the respective speaker. If you have a question for each speaker, please type your question in the Q&A window during their presentation. Please make sure you use the Q&A window to type your question, and do not use the chat window because the moderator may not be able to see your question. Please note that you can only send questions to the 4 speakers during the Q&A of their respective sessions. We will try to take as many questions as we can during the 5-minute Q&A, but if we cannot cover all the questions, we will email the answers to you after the event. After the 4 speakers have presented, we will have a panel discussion moderated by UAESBC President, Dr. Brian Shager. After introductions and initial discussions, Dr. Brian will select several questions from the Q&A window to ask each panelist. If you have a question for a particular panelist, please indicate in your question the speaker or company name. And now, ladies and gentlemen, It is my pleasure to invite our first speaker, Mr. Ananth Ramchandran, CEO Southeast Asia of First Abu Dhabi Bank. Ananth will be speaking on the topic of overview of UAE banking and finance. Ananth, please.
Thank you, Noor, and hello, everyone. I'd like to thank the Business Council for this invitation. It's my absolute pleasure to be here amongst this august audience and talking to you. Once again, thanks for the opportunity. Let me start by sharing some insights into the UAE and the banking sector. Start off by talking a little about the UAE and position the country and what it is made up, and then before we go into the banking sector. So may I request that the slides be shared on the screen right now, please, Huda? Thank you. Great. We move to the first page, please. Thank you. Thanks a lot, Huda. Appreciate it. The Gulf Cooperation Council, or the GCC, is a political and economic union of Arab states bordering the Gulf. It was established in 1981 and it has 6 members, which is the United Arab Emirates, Saudi Arabia, Qatar, Oman, Kuwait, and Bahrain. So UAE is a big part of the GCC. The UAE population is made up of over 200 nationalities. It's the second largest economy in the GCC, with a GDP, as you can see on the screen, of 400 billion nominal GDP. We have a very high GDP per capita of US dollar, almost $44,000 per head, which is indeed quite impressive. The population of the UAE is roughly 10 million, which is made up of 200 nationalities, as I said, of which more than 80% are UAE residents. More than 80% of the UAE residents are expats. Citizens from India, Pakistan, Bangladesh, Philippines make up the largest portion of expats in the UAE. The UAE has the 5th largest proven oil reserves in the world, which is 8% of the total global reserves, after countries like Venezuela, 25%, and Saudi Arabia, which is 22%. So we are the 5th largest. We are one of the highest rated sovereigns in the world. We are rated AA2 by Moody's and AA- by Fitch, which is very, very high investment grade, as we know. Just to give a sense of what this really means, other similar rated countries include France, South Korea, as an example, and UAE is better rated currently than Japan, China, UK, and Israel. So that's something to speak about the quality of the finances and the strength of the nation and the creditworthiness of the nation as determined by rating agencies. As you can see from the screen, the growth in UAE has picked up dramatically after the natural downturn during the COVID phase. Our economists forecast real GDP growth to be anywhere between 4 and 5% over the next couple of years, even though we are facing recessionary conditions globally. But I think the UAE economy has rebounded very strongly from the COVID phase. So we are poised for to finish 2022 very well, and 2023 also looks pretty okay, although we face headwinds. It's a diversified and competitive economy, and 75% is the contribution from non-oil sector to the GDP. So while people perceive UAE to be mainly driven by oil and gas, it is quite fascinating to note that a significant portion of the GDP comes from other sectors as well. So that's having set the scene for what the economy is. Now let's turn our attention to the banking sector and see what the banking landscape looks like. And may I request we turn to the next page, please. Thank you. So on this page, what we have done is we have just tried to give you a sense in your heads to map out the banking sector. And what I'd like to do is first talk about the size of the banking sector, and what is the composition of assets, where does it stand in terms of various metrics. After this, we will talk about who are the key players. So on this slide, we're talking about the overall size and scale of UAE's banking sector. There are 21 local banks and 38 foreign banks that operate in the UAE. That's a pretty large number of banks for a population of around 9.5, 10 million people. The total banking assets in 2021 forecast should be roughly in the region of 800 billion US dollars, which is pretty substantial. And this has seen a 5% year-on-year growth, largely driven by the post-COVID recovery. The total net profits generated by the banking sector is almost $10 billion projected in 2021. And the net provision, which means the provisions that banks make for loans, has actually dropped by 10%. The reason is pretty straightforward. After COVID, the need for provisions became less and some of them were returned back as well. So level of provisions went down, which is good for the industry. Now, cost to income ratio, the UAE industry is, for those of you who know, is legendary for running the businesses at a very low cost to income ratio. So the cost to income ratio in 2021 was 35.6%, 36%. Now, by way of comparison, any of the global banks, if you look at the global banks and look at the balance sheet, you will see them in the 50s, 40s, 60s, whereas the UAE banking sector is operating at a pretty low, very attractive cost to income ratio. The UAE banking sector is solidly capitalized. It's solidly capitalized. It's running at a capital adequacy ratio of nearly 17%, a slight dip from 2020. But that's because the RWA of the lending has expanded and the capital raising has not kept pace. But that's a very minor drop, but 17% is still a phenomenally strong capital ratio, signifying a very strong banking sector. The return on equity is pretty strong. If you look at 2021, the UAE banking sector as a whole returned almost 12% in terms of return on equity. And that's mighty impressive. And this is what makes the UAE banking sector very, very attractive from a steady returns perspective. The overall asset quality or the non-performing loans in the system is about 7%, which I think, given the mix of banks and everything, I think it's okay. And it remains a highly liquid sector with the loan to deposit ratio at almost 80 to 83%. So overall, the UAE banking sector is in a very solid position, highly capitalized, profitable, liquid, decent asset quality, and therefore well poised to grow and capture the growth going forward. I'd like to now talk about the key players in the UAE banking sector. And let's flip the page, Huda, to next, page 4. And what I've done here is I've run a table of all the top institutions, and we have ranked them by total assets. So these are publicly available figures. The sources are quoted at the bottom of the page. And you can see that the top institutions there in terms of ratings, etc. And most of the top banks here on the list, have pretty decent sized asset base. They're making decent net profit, they're returning enough, paying good returns to the shareholders. The cost to income ratio is pretty impressive. You can see First Abu Dhabi Bank cost to income ratio is 26.4%. We have a total asset base of about $275 billion US, and a loan to deposit ratio of 66%. So basically, a low loan to deposit ratio would mean that the liquidity is high. Return on equity is pretty decent as well. So similarly, there are a lot of good banks here who you can see have very good metrics. As if I was an analyst and I looked at this, the 2 or 3 things that strike me is that the sector has still a lot of room to grow, and that it is profitable. It's got an adequate base to grow the capital, and therefore it's very well positioned to capture the growth that will inevitably come to the UAE region. It's a soundly capitalized, well-run, well-governed banking sector. And obviously, it has got banks from all the Emirates in here as well. Huda, let's turn the page, please. So I wanted to touch upon some key trends so that some takeaways are there and it's useful for Q&A. I think there is a significant emphasis by the UAE regulator, Central Bank UAE, to get the banks in line with UAE's digital agenda. It is the regulatory is trying to get the banks aligned with the broader UAE digital goals, which means there is a significant emphasis on digitization, digital banking, automation of systems, cloud, basically upgrading the technology to be in line with the best in the world. This is what they're trying to do. The other part is the UAE is also promoting digital-only banks in order to keep up with the other key financial centers in the world. There is also a goal to develop as a leading wealth management and a private banking hub, which is pretty obvious because there's a lot of investors and investments coming into UAE, and Dubai and Abu Dhabi are becoming centers for attracting capital. So it is but natural that the banking sector will try to take advantage of this and become the leading private banking hub. I've already spoken about digital transformation. Let's move on to ESG. There is significant emphasis on ESG. Every bank in UAE is working on the right ESG policies and the ESG framework, which is applicable to its business. And I can talk of FAB. We have in fact placed so much emphasis on the ESG that we have separated the G part, the governance part, into a separate function within the bank. And then we have the environment, the E part, as a separate function. So we are not saying it is one desk or one particular function. Each has got a separate function. So we have a head of governance and we have a head of environment. Working on the bank's agenda and taking us in the frontiers of that thinking and preparing us for the future. We have a great push towards gender diversity, which means bringing more diversity into the workforce, into leadership at entry level, at every level. And I'm proud to say that, FAB is quite a leader in this respect. Now, I'm conscious of time and I know I've exceeded it already. So next page, Huda. So here I've just highlighted a little bit of FAB's metrics in terms of how we look like in terms of various measures. As I have already said, we are a highly rated, large, liquid, profitable, well-capitalized bank in the region. We are a solidly run bank, and we are now serving in many parts of the world, and we are proud of being in Singapore and supporting Southeast Asia as well. And the last page, for those who are academically inclined, who want to see how the UAE banks compare in terms of credit ratings versus their return on equity. So you have on the one axis, you have return on equity, and on the other axis, you have the rating. So you can see what is the rating band and where do they actually return. So I think that each point signifies where that crosses. So this is something for people to reflect on. I'm quite happy to answer questions on this later on. So I thought that sort of gives a very good introduction to the landscape, positions the banking sector in your minds, and sort of just sets the stage for further discussion on this. With that, I just wanted to say thank you again, Dr. Shegar, for giving me the opportunity, and I'm open for taking any questions.
Thank you, Anand. A very broad-based and balanced view indeed. In an article I read recently entitled "The Big Picture," the overriding message was that the present situation in the Middle East, and particularly the UAE, was that it's spring in the desert, but without challenges, of course, but not without challenges. So that, in a way, sets the tone for much of what you have actually laid out. It's time now for us to take questions from the Q&A window. Do we have any questions? Let's see. Looks like we have a question now. And it's basically, are you seeing emphasis on green financing and ESG in UAE banks? You had touched on it, but
Yes.
Specifically, what kind of challenges do you see in implementing these measures? Because there's a lot more green talk than there is green walk.
Yeah, Noor, I think you hit the nail on the head. As a bank, we are getting a lot of guidance and leadership from the top in terms of the direction in which my bank or FAB needs to travel, and we are bringing that into every aspect of our decision making. When we make loans, when we evaluate proposals, when we build new buildings, when we advise our customers, we are always asked to wear a responsible an environmental hat. I and us here at FAB are witness to a number of transactions that have green credentials and have passed the green test. And just yesterday, I saw there was a capital raise done for a client, which is actually in the bond market, but it is actually a subordinated bond. But actually, it's got green credentials as well. It's basically a green hybrid tier 1 bond. So we are seeing that, and many of our customers are now asking us to participate in green outings or green financings. The biggest challenge is there are twofold. First challenge is how do you protect against greenwashing? How do you as a banker look? And then this is irrespective of whether this is in the Middle East or rest of the world that we operate in. We need to have standards robust enough to be able to identify the genuine financings versus the greenwashing type of opportunities. Second, from an investor point of view, the returns are not any superior. So many issuers ask us, what's the benefit in issuing a green bond if I can't get a better pricing? Because many investors still are not willing to pay the premium for green financings, but that's changing rapidly. It's changing rapidly because many of the investors who are asset management companies or professional investors have a mandate to invest only in green financings. So then they have to come and participate in these offerings. Thank you.
Thank you. So clearly, there will be a lot of mindset change on this subject for sure. But in the longer term, it's going to be for the benefit of society.
That's correct.
Yeah. Well, thank you for the questions. We have a few others, but unfortunately, we are running out of time. So we will try to answer any remaining questions for Ananth via email. Thank you, Ananth. Ladies and gentlemen, I would now like to invite our next guest, Mr. Jody Waugh. Jody is Deputy Managing Partner and Head of Banking and Finance at Al Tamimi and Company. And Jody will share with us about the important regulations for banking and finance in the UAE. Jody, please.
Great, thank you. And pleasure to be with everyone today. And thank you very much for the opportunity. As mentioned, I'm a partner in Al Tamimi, homegrown in the UAE, and we've grown over the years with the country and expanded into the Middle East. So now we have full coverage throughout the Middle East and also into North Africa. So today I wanted to give you a very brief introduction into the UAE, the legal and regulatory system, and also talk about commercial versus financial service activities and what the options are for people to come and set up business here. I'll just share my screen. So hopefully everyone can see that now. Now, when we look at the UAE, it's quite a unique jurisdiction, and it's unique for many reasons, not least of which is its legal and regulatory landscape. And this is largely driven by the desire of the country to become a financial hub, a global financial hub, its desire to attract foreign investment, and also make the country a very user-friendly place with numerous options to come and set up business, whether they be commercial or in the area of financial services. And you'll see in terms of the legal framework here, very recent examples of constant evolution, constant improvement as they look to achieve that. And in recent times, you know, as the previous speaker mentioned about the evolution, the digital transformation, fintech hives, new regimes on crypto, and numerous laws, not only to deal with financial services, but also to deal with commercial activities and also social and personal issues. So the country is driving not only the economy and businesses, but it's also looking to always enhance the social and personal aspects of living and working in the country. So when we look at the legal and regulatory framework, the UAE is quite unique in that it essentially has 3 jurisdictions within the one country. So we start with the UAE mainland, often referred to as the onshore part of the UAE. And there we have options to set up both commercial and financial service entities. The mainland follows the civil law, and it includes numerous options for what I would call commercial free zones. So these are essentially geographical areas for commercial licensing, and they're largely grouped by sector, but they remain by and large part of the mainland. Then we have the 2 financial centers, so the Dubai International Financial Center and the Abu Dhabi Global Market, and we'll I believe you're hearing a bit more about those centers, but essentially the DIFC and ADGM are jurisdictions within the country. They have their own legal system, which is largely based on common law, and they have their own court system, commercial registrar, and so on. They are very similar to the financial hubs that you would find in Singapore, Hong Kong, and London. And very much, most people when they come to the UAE are familiar with those centers for that reason. So, as I say, quite a unique landscape when we look at the jurisdictions and the options that exist within the one country. So when you are looking to come and set up business here, one of the primary questions we always have to think about is, you know, do your activities engage in commercial, or do they touch on financial services? And in some respects, that's quite a simple question sometimes. But what we're seeing as the evolution of financial services, sometimes that question becomes a lot harder, especially when we get into fintech, crypto, payment services and the like. We have a lot of entities that are involved in financial services, but their activities may not actually encompass regulated activities. So it's an important starting point to actually define what your activities are and the licenses that you'll need. So with commercial activities, there are various options for establishment in the UAE, from the mainland, the commercial free zones, through to the financial centers in the DIFC and ADGM. If, however, you fall into the regulated side of business and offering financial services, that's where you still have options on the mainland and also in the DIFC and ADGM. However, typically the commercial free zones would not be a viable point of call for regulated services. The analysis can change depending on which license you go for and also which jurisdiction within the UAE you want to operate from. Although obviously very similar in terms of the activities, some of the licensing, the categories and the requirements can be different between those three jurisdictions. And when we talk about financial services, it is the full spectrum. So everything from representative offices, asset managers, fund managers, remittance companies, payment companies, banks, private banks, through to brokerage and so on. So it's the full spectrum that can fall into the second category there of financial services. So when we look at commercial activities, again, it's very key because of the licensing regime here. It's key that we establish what your activities are and what license you would need to operate here. And once you do that, you can start to look at the various options, and there are always more than one option for where and how you want to set up your business. That can be driven by commercial considerations like the time frame, the visas you'll get, whether you need an office and so on, and what your customer base is, where you want to do business. But generally there are various options here. And that also goes for some of the logistical aspects of setting up business here, like bank accounts, bank facilities. You saw in the previous presentation the number of banks, whether local or international, that offer services here. And so, you know, there's a full breadth of possibilities here, but you do need to think about things like documentation, KYC, bringing foreign documents into the country and legalization. And many of the authorities will help you here with these logistics. For both commercial and financial services, you also need to think about employment, the visas you'll require and the number of visas, which can differ. Tax, we obviously already have VAT here with corporate income tax being introduced from next year. However, some of the free zones in the UAE will have exemptions, so that's another thing to consider. And also repatriation of profit and the like, and luckily in the UAE, that's quite a simple answer in that there's no exchange controls and no other limitations. So when we look at financial services, again, the key is understanding the activities, whether they're regulated, and then that will drive the analysis of what license you need, and then moving into jurisdictional options. And just like commercial activities, usually there is more than one option, whether you want to be mainland or in one of the financial centers. And again, there are commercial considerations in terms of which of those options fit your particular business and the needs that you have. And obviously, like any jurisdiction, there will be regulatory oversight from the relevant regulator, and each of the financial zones has their own regulator. And onshore, you have the central bank and the securities authority, depending on your business. And I thought it'd be interesting just to, and some of these items were actually alluded to already, what's actually happening in the financial services sector in the UAE. And I would, from our perspective, it's a very vibrant time, and it has been for some time, not only in terms of the developments in the legal and regulatory framework, but also the business and the companies that are coming here to set up and do business. We've talked about crypto and virtual asset regime. That is evolving, and you know, as it stands today, there are various options for people to come and do crypto, virtual asset related business. And we're seeing a lot of the global brands choose the UAE as their center, their global center, and they want to be regulated, they want to be well regulated, but they want jurisdictions that are willing to license and accept their business, and that's definitely a trend at the moment. Along with fintech and digitization, this is driving a lot of what's happening in the country, and also the new business that's coming in. This year alone, we'll see 2 digital commercial banks launched, and a lot of other services are either going digital or are heading that way. Data protection has been enhanced across the region actually, but also in the UAE to meet international standards. And I think one of the biggest trends that we as a firm and as a banking practice have seen is the evolution of our client base, because we're seeing alternate finance and non-financial institutions enter the market. You know, everything from crowdfunding to buy now later schemes, factoring, and the like. And you're seeing tech companies, you're seeing commercial companies, mall operators, hotel operators move into financial services together with payment operators and the like. So, as I said, it's a very vibrant time in the UAE for financial services, and it's undergoing, you know, very, very rapid growth at the moment, and it's going to be interesting to see the evolution over the coming years. So I know it's quite a quick snapshot of the legal landscape here in the UAE, but we're always happy to help if anyone needs assistance in the UAE. And for now, I think there's a short period for Q&A if anyone has any questions. Thank you.
Thank you, Judy, for giving us such a good, broad-based status on a subject which in itself is very challenging, not only in the UAE, but in all other financial centers. We would like to ask if, you mentioned that there is a drive in the economy and in businesses and for businesses to make the UAE a user-friendly place and to set up businesses in order for it to be also a relevant financial hub in the region. That is indeed noble. But while you mentioned that there is a trend in seeing more financial services related companies coming in, how are you seeing the learning and development also of those who are going to be engaged in the business to keep up with these changes?
Yeah, look, I think if you look at the development in the country, obviously, a lot of things drive change, you know, and it does come from the top. And as the previous speaker alluded to, there is a drive from the top in terms of the digital transformation of the economy. The government itself is driving a lot of these developments, you know, attracting businesses, reducing time to set up a company, extending visas, reducing fees and so on. So you see that drive from the top. And you also see it in the sector itself. So a lot of the financial institutions are driving this change. You know, they themselves are driving technology and digitization because, you know, they have to stay relevant and they have to stay essentially up with the market. And so a lot of FAB itself has seen a lot of different initiatives taking advantage of, you know, digital transformation and new initiatives into payments and so on. So you're seeing not only the government, but also the sector drive it. And then you're seeing the legal and regulatory landscape change to keep pace with it. So you're seeing multiple contributors to this evolution of the sector. And I think, you know, most of the participants in this market, they also want to see it. They want to see the end of cash. The UAE is historically a very cash society, and we're seeing everyone embrace the move and the change and the new products and the way of delivering service to customers. So, as I say, it's an exciting time, and I think it's being embraced by all the stakeholders in the market.
Well, indeed, challenging as it is with the KYC, the AML, and, you know, all these issues, and to add to that, the transformation and the inputting the regulatory environment's requirements, it will be a challenge, but it's a good direction to be heading towards in terms of wanting to achieve the objective of being a viable financial center.
Exactly.
Thank you very much, Jody. And we do have a few more questions, but we don't have the time for that, unfortunately. So that will be answered separately. And now we'd like to invite Mr. Kwok Wai Lam, Senior Executive Director, Authorization and FinTech Services Regulatory Authority at Abu Dhabi Global Market, also known as ADGM. Wai Lam will be speaking on the opportunities in Abu Dhabi. Wai Lam, please.
Thank you, Noah, for having me. Can I trouble you to perhaps put up the slides for me? If not, I will do it at my end. Can everyone hear me clearly? I think yes.
Yes, we can hear you clearly.
Thank you. Can I trouble you to help me put up the slides? If you can't, then just let me know. I'll do it at my end. I'll share my screen.
Yes, yes, we're putting up the slides.
Thank you. Right, thank you. Well, good day, ladies and gentlemen. For those who may not be familiar with Abu Dhabi Global Market, ADGM is the International Financial Center of Abu Dhabi that is established on English common law. Launched in October 2015, ADGM's mandate is to develop financial services as a core economic sector to help Abu Dhabi diversify away from the oil and gas sector. One of our key objectives is therefore to support international firms looking to carry on business in the UAE and serve the Gulf region, as well as support local firms looking to expand internationally, leveraging our common law regime. I am from the Financial Services Regulatory Authority in ADGM, which is the authority responsible for the supervision of the banking, insurance, and capital markets sector within ADGM, very much similar to what the MES does in Singapore. I head up the division responsible for licensing financial institutions seeking to establish presence in the ADGM. I also spearhead the FinTech innovation strategy within the financial center. So today I hope to give you some insights into the vision and commitment of the Abu Dhabi government in enabling the rapid economic transformation that is happening in Abu Dhabi. And given my specialization in the financial sector, I will also provide an overview of ADGM's financial services ecosystem, what we as policymakers and regulators are doing to support the digital transformation and to build ADGM into a world-class financial center. Next, please. Right, I talked about a bit about ADGM, Abu Dhabi. Can you move to the following slides? Next one as well. Thank you. So very briefly, Abu Dhabi is the capital city of the UAE, accounting for 2/3 of the UAE economy. The UAE is strategically located at the crossroads of the east and west. So to the west, it is 7 hours by air to London. To the east, it is 7 hours by air to Singapore and Hong Kong. Coupled by the fact that it is a political safe haven in the region, this puts the UAE in good state as the hub to serve the European, Asia, and African continent and business time zones. The UAE today has become one of the most favorable and friendly environments in the world to do business. The UAE is ranked first for ease of doing business in the Middle East. It has 0% corporate and personal income tax. They recently introduced the Golden Visa program, which gives foreign talent residency for 10 years. Abu Dhabi particularly was named the most livable city in the MENA region by the Economist Intelligence Unit in the last 2 years. Particularly, it was voted the safest city in the world to live in the last 5 years. And as a Singaporean living there, I can totally vouch for that. So it is not surprising that most global businesses today use the UAE as their business hub to serve the Middle East, Africa, and South Asian region. The person in the photo is our chairman, who belongs to the new generation of leaders educated overseas, well-versed in technology, open and progressive to embrace new ideas and new ways of doing things. Next slide, please. So I spoke about Abu Dhabi being the most livable city in the region. It does not just have world-class business infrastructure with one of the highest penetration rate of the internet and smartphones. It also offers lots of choices in terms of lifestyle and culture. So in the last few years, a lot of effort has gone to making Abu Dhabi a place to work, live, and play. For example, you have the annual F1 race in Abu Dhabi, the only race that straddles between day and night. You have the global marquee cultural institutions such as the Louvre and the Grand Mosque. You have international schools and universities such as New York University, Paris Sorbonne University, INSEAD. All of them have campuses in Abu Dhabi. Next slide, please. So Abu Dhabi and the UAE offers an exciting gateway to the vast Middle East, Africa, and South Asia markets, home to 3 billion people and $7.4 trillion in GDP. If you look at demographics, this huge hinterland is projected to account for over 50% of the world's population growth by 2050. So that's a huge growth driver for consumption, for production, for manufacturing, for demand of financial services. Perhaps one of the most important value proposition of Abu Dhabi is that it is home to one of the highest concentration of institutional and private wealth in the world. Having the investment opportunities is one thing, but having access to capital is a critical enabler to bring about those opportunities. But that said, there are challenges and gaps. According to a report by Global Finance and World Bank, almost 50% of the world's 1.7 billion financially excluded adults are concentrated in the MEASA region. So that is a huge challenge in terms of pushing out financial services products, but a huge opportunity too, because of the untapped potential higher. According to the IFC of World Bank, if you look at the SME funding space, the credit gap for micro, small and medium enterprises stands at about $260 billion. If you can find ways to inject alternative source of funding into that space, putting money into the hands of entrepreneurs, SMEs to work and generate returns and growth, it becomes another huge important pillar of growth for this entire region. So that's why there's a strong push for entrepreneurship, technology innovation, digitalization, and different ways of delivering products and services to more people in a cheaper, better, and efficient way, as alluded to by Jody as well as Anand. Next slide, please. So this slide encapsulates the key stats in relation to Abu Dhabi as a wealth and investment hub. The fact that Abu Dhabi's economy is backed by significant reserves allows it to take a long-term view in terms of its government policies to ride out any boom and bust cycles. Next slide, please. So you might ask, what was the impetus of the major transformation in the last few years? In 2013, the Abu Dhabi government embarked on an ambitious undertaking known as the Abu Dhabi Economic Vision 2030 to diversify away from the oil and gas economy. And they're doing this from a position of strength after seeing the painful lessons that the region experienced during the great financial crisis. So after the financial crisis, Abu Dhabi realized that they had to start diversifying their economy, even though they have abundance of oil reserves. Today, hydrocarbon accounts for just less than 50% of the Abu Dhabi economy. And the target is to bring that down to about 35% by 2030. Under the 2030 blueprint, 12 economic sectors were identified as a priority for diversification. Financial services is one of them, and thus ADGM was born in 2015. Next slide, please. So as part of the execution plan, the Abu Dhabi government set up the Abu Dhabi Investment Office, which is the equivalent of Singapore's Economic Development Board, to support FDI. It offers various platforms and incentive programs to help anchor players looking to establish a major presence in Abu Dhabi. After this presentation, I will circulate this deck of slides. Next slide, please. Next, please. So very quickly, ADGM is a very young international financial center. We are 114 hectares in size, slightly larger than Canary Wharf. We went live in October 2015, starting with a clean slate with no legacy issues. So that gives us an amazing opportunity to reimagine and rethink what the future state of financial services and the economy would look like, and adopt a very blue sky approach in terms of how we want to shape our financial center, our rules and regulations. Today, we are a multiple award-winning center, fastest growing financial center in the region. I think this slide needs some updating because we managed to collect some more feathers on the cap in 2021. So more recently, we were voted outstanding fintech regulator for the UAE by Open Banking Forum. We were voted the financial center in the region 6 years in a row. Next slide, please. I mentioned earlier that financial services is one of the key economic pillars under the diversification strategy, and ADGM was introduced as a catalyst to grow the financial services sector and commercial ecosystem in Abu Dhabi. I think this is quite important to remember that financial services sector does not exist as an end in itself. It serves as a lubricant for the other parts of the economy. It exists to support production, manufacturing, services, and other important verticals of the economy. Hence, even though we are a financial center, more than 90% of companies in ADGM are non-financial services related. So today we have about 4,000 non-financial services related firms and about 200 financial institutions. Next slide, please. Within ADGM, there are 4 functional authorities. I'm from the Financial Services Regulatory Authority, the equivalent of MES in Singapore without the central banking function. The registration authority is the equivalent of the ACRA in Singapore. The ADGM courts is the courts of first instance and courts of appeal that support ADGM with a fully independent common law framework to adjudicate civil and commercial disputes. The ADGM authority is similar to the financial center development function in MES to drive ADGM's growth, strategy, and business development efforts. Next slide, please. Some additional color on the value proposition of ADGM. Certain things worth reiterating in these slides include the direct application of English common law, which makes ADGM the first jurisdiction in the Middle East to adopt a similar approach to that of Singapore and Hong Kong. There are no foreign ownership restriction. There's 0% corporate income tax. There are no restrictions on repatriation of profits. And because we are a new center, you find that most of our processes are digital by default, which supports business efficiency. In fact, the ADGM courts is the first in the world that runs entirely on a digital platform, from electronic filing to electronic hearing and case management. Next slide, please. So today, ADGM is an investment hub featuring an end-to-end financing ecosystem catering to startups and scale-ups at different stages of life cycle. It is home to one of the world's largest concentration of sovereign wealth, institutional and private wealth. Investment schemes and funds placement programs are available to support startups, scale-ups at different stages of growth to bolster VC activities and attract international talent to ADGM. In the last 2 years, we have seen VC activities in ADGM increase fivefold, helped in part by the streamlined regulatory framework that we have put in place for VC fund managers. Next slide, please. Today, ADGM is a center of regulatory innovation, having put in place a comprehensive suite of regulatory regimes governing a whole host of digital financial services. I believe ADGM has distinguished itself as one of the most advanced regulators in the region, offering a world-class progressive regulatory environment supporting fintechs and new business models. And that's the reason why we were voted the most innovative regulator in the region. Next slide, please. Today, within a short span of time, ADGM has built itself into a world-class business and fintech ecosystem. It is the fastest growing financial center in the region. In the last 2 years, despite COVID, we experienced exponential growth. In particular, we have built a strong name for ourselves as a champion in fintech innovation and are often regarded as the pioneer responsible for transforming the fintech landscape in the region through regulatory innovation and progressive regulations. Finally, I think if you just move to the next slide. Oh, sorry, probably not the last one. But the picture in there depicts the current skyline of ADGM. The low-rise inverted pyramid at the center is the ADGM building, which is where I work. Today, besides office space, the center boasts an exciting collection of restaurants, shopping malls, hotels, and residences, making ADGM a place to work, live, and play. Next slide, please. Right, so building the ecosystem is not enough. We need to activate it. At ADGM, we play an active role in activating the business ecosystem in collaboration with industry stakeholders through our flagship events. Every year, for example, we organize the largest fintech gathering in MENA, known as Fintech Abu Dhabi Festival, bring together the fintech community and top minds from over the world to Abu Dhabi. In last year's hybrid event, we attracted more than 27,000 registrants, 180 speakers from over 40 countries. So this year, the event will be held in November again. It promises to be even bigger and grander, being held in the entire week of the 14th of November, culminating with the F1 weekend in Abu Dhabi. Next slide, please. Right, I think I will stop here. The remaining slides talk about the process of setting up shop in ADGM. So I will circulate this slide so that you can go through at your own convenience. My email contact, I suppose, can be obtained from the organizer as well. So do not hesitate to reach out. With that, thank you.
Thank you. Certainly ADGM is strategically located to achieve its objectives. Abu Dhabi is obviously very recognized as one of the leading cities for the quality of life it is offering, and is consistently ranked also as one of the safest places. As a woman, I can testify to that because I visit Abu Dhabi often. And indeed, the high number of ultra-high net worth individuals is an exciting captive business. More interestingly is the fact that many of these investors, especially the millennials, both men and women, know what they want generally and how they want it done. So congratulations for being there. We do have many questions, but we can only address one of it, which is there any collaboration between Singapore and the UAE government to help Singaporean businesses looking to expand in the UAE to gain a foothold?
Certainly, every year, actually, the UAE and Singapore host this thing called a joint forum. And as mentioned earlier in one of the slides, there are 12 priority sectors under the Economic Vision 2030 roadmap. And so for each of these priority sectors, there will be designated government agency that administers the relevant support and incentive program. So in the case of the financial sector, the ADGM is the relevant go-to touch point. I would suggest that a useful place to start for Singapore entities is the Enterprise Singapore, with whom we have been in discussion on how to enhance cross-border trade opportunities for SMEs between the Southeast Asian market and the Middle East and African market, as well as enhance interoperability between the SME ecosystems between Singapore and the UAE. You might have heard about Business Sans Borders initiative that's led by the MES and IMDA. So we are currently in discussion with MTI, MES, and IMDA to make this process of connecting the SME markets between the Singapore and the UAE a lot more efficient and cost-effective. One specific project that ADGM is currently undertaking is the development of an SME financing digital marketplace with a view to connect to the Business Sans Borders platform in Singapore. And the idea is to create a marketplace for buyers, suppliers, and services providers between Singapore and the UAE to facilitate cross-border trade and financing. And for instance, within the marketplace, one can find participants including UAE government and family businesses, such as the Abu Dhabi National Oil Company, as the buyer of oil and gas services. There could be banks that can provide supply chain financing for buyers and suppliers, and service providers that provide digitalization services for participants, etc., etc. I just want to make a quick reference, mention about the collaboration that we had specifically with the Singapore's IMDA and MES. And in fact, in collaboration with commercial partners, DBS Bank, Emirates MBD, and Standard Chartered, we successfully concluded last year, a pilot on cross-border trade financing using IMDA's Trade Trust Framework to facilitate the transfer of electronic records between jurisdictions that have adopted the United Nations Commission on International Trade Law on Electronic Transferable Records. These two regulations between Singapore and Abu Dhabi harmonizes the legal recognition of digital documents such as electronic bills of lading across both jurisdictions, and complements the larger trade movement by the G7 economies on adopting electronic transferable records in international trade. So we are paving the ground, putting in place the infrastructure. And I think every year we will sort of discuss in the roundtable at the Abu Dhabi Singapore Joint Forum to explore further opportunities to collaborate. Thanks.
Thank you. Well, hitting the ground indeed, working with the right parties, and going forward, we will see the positive results indeed. Thank you.
Yeah. Also, for the rest of the questions, not to worry, I will try to answer online, and even after this session, I will come back with those answers to the queries.
Certainly, we are expecting quite a few questions. Thank you again.
Thank you.
Thank you. Ladies and gentlemen, I would now like to invite our next speaker, Mr. Ali Hassan, Senior Representative for Europe and North America at the Dubai International Financial Center Authority, better known as DIFC. Ali will be sharing with us about the opportunities in Dubai. Ali, please.
Good morning. I'm absolutely delighted to be here and representing Dubai as part of the wider UAE team. I lead international coverage for Dubai International Financial Center. I've actually been involved with the center for 17 of its 18 years, 8 years as a financial regulator in Dubai with the DFSA, having previously been with the FSA in the UK. My primary role currently is to help firms leverage Dubai and DIFC as a platform for accessing market opportunities in the MEASA region and increasingly adding the E to the front of that and covering Europe as well. So just turning to the Dubai International Financial Center, and I think it's just worth recapping where we've come from and where we're going. It was actually set up as a federal financial free zone in 2004, and it has moved very much beyond the stage of aspiration and represents a substantive financial center and hub. It is in fact the largest and deepest financial services, professional services and innovation cluster between London and Singapore. So it's real substance that is in the center, and it's very international. I think that's the key thing, and that's the theme with Dubai. It is an international location. There are other centers in the region, and we have been like an agent for change, bringing international standards across the region. So there is, Bahrain Financial Harbour, King Abdullah City in Saudi, Qatar Financial Center, and of course ADGM. We are privileged and proud and humble that we have enabled the region as a whole to develop in that way. But the facts speak for themselves. We are ranked in the top 20 of global financial centers by the ZEN annual index, number one in the MEASA region, and we're trusted by the who's who of finance and corporates from Europe, from Asia, and the USA, with close to 4,000 companies. Now, these are again substantive companies. We're not sort of including structures, and over 32,000 people in the center. And over the last 4 years, as we continue to evolve, we have built out the largest fintech innovation system in the region. Our links with Singapore are extensive. Singapore is our 8th largest market. India is our 4th largest market. The United States 2, and the UK 1. So that just again gives you a flavor that this is an international center. And what we're trying to do, what we're helping Singaporean firms and others do, is to export their expertise, products and solutions into the high growth, high opportunity region. And we've already, Jody and Kwok have already touched upon the application of international standards. And as I said, we're very happy that we were the first in the region to do so. We've done it in a unique way. We have our own body of laws, DIFC laws, and I think that gives certain advantages, which I'll touch on in a moment. Of course, we have the courts, and we have our financial regulator, the DFSA, that is progressive but prudent, international in its credibility, over 150 MOUs, and it is a regulator that primarily looks to execute its main responsibility, which is sound and prudent supervision. So it is not a, it is not a center that takes everyone in. Firms have to meet the standards that are applicable. And so anyone coming from a common law jurisdiction such as Singapore will certainly find the DIFC like home from home. And then just picking up that point on legislation, we do have our own sets of laws, and that actually allows us to flex, to take into account the local context and developments, and also to maintain our ability to be in line with international developments and initiatives. So within the DIFC, you have data protection law, you have insolvency law, you have netting law, and importantly for innovation, intellectual property laws to protect the solutions that are being created. And our regulator, the DFSA, with its sound and prudent approach, does continue to evolve the regulatory regime as well to reflect the new and emerging business models that we're seeing in financial services. I mean, we very much see regulation as an enabler that brings certainty and safeguards required by both market practitioners and investors alike. And recent examples include a full comprehensive payment services regime, regulation for digital assets, and crypto tokens. And the crypto tokens is arguably, as far as I can see, one of the most comprehensive regulatory regimes that's been put in place. Again, we're not a jurisdiction, and the regulator, the DFSA, is not a regulator that goes out there and says, we've got a regime, everyone come, and actually, there's an issue around substance and the requirements. And so those laws and regs, of course, are combined with those business-friendly aspects that Kwok mentioned in relation to ADGM. They apply equally in DIFC. And again, this goes to the substance of the center. We're in fact in phase 3 of our multi-decade growth, and we see the future very much being a combination of traditional finance combined with those new digital business models. And all of DIFC's success, as Kwok said, financial services is a lubricant. It facilitates the wider economy, and everything that the success that DIFC has seen has been built on the strengths of Dubai as a city for trade, commerce, for talent and lifestyle. In terms of trade, Dubai is very similar to Singapore. It stands out as the regional global commercial hub, linking those trade flows from Asia, Middle East, Europe, Africa, and beyond. And hand in hand with commerce goes finance. And this drives demand for commercial banking, for trade finance, for capital markets activity, as well as for insurance and asset management. And yeah, so Dubai is a standout location for global talent, great lifestyle, visa programs, everything is in place. One point I would like to highlight is that it's not as expensive as some people perceive, right? So Dubai is in fact ranked 42 in Mercer's cost of living index, which is a better rating than London and some other financial centers. So just coming to highlight 3 of the segments. Firstly, banking. It is already a comprehensive go-to cluster for banking and finance. You have global and regional players in banking, investment banking, and private banking, including DBS and Bank of Singapore. And financial firms in the DIFC are supported by a deep cluster of knowledge expertise, lawyers such as Al-Tamimi, accountants, consultants, making DIFC a natural focal point for finance-related activities. And some of the ways, some of the examples, products and solutions that banks and finance companies can offer, you can offer obviously the full range of commercial, trade finance, wholesale banking services. You can originate and book lending. You can run M&A and other capital market activities. You can operate regional treasuries for corporates and in-house needs. And of course, you can offer private banking to that growing pool of private wealth, which I'll turn to in a moment. So Kwok sort of mentioned ultra high net worth individuals in Abu Dhabi, and we see this very much a wider regional play. And I think that much has been talked about and much has been looked at in terms of the sovereign wealth funds, but that private wealth pool, which is actually in quantum terms comparable, around $3 trillion, that's becoming more sophisticated. It's migrating from physical businesses, real estate and cash, and being deployed in financial markets, which is generating opportunity. Interestingly, and most importantly, Dubai is the focal point not only of regionally generated wealth, but is increasingly attracting international private wealth and entrepreneurs to the city. So Dubai ranks 7th globally for wealth migration. In the DIFC itself, we have over 70 family offices, 150 plus foundations, $160 billion managed within the center, with over $500 billion of assets raised from regional investors, just to give you a flavor of the activity. And the real asset management cluster there, I've sort of mentioned the private banks, but we also have global asset managers, and we have alternative managers, and they're servicing sovereign wealth and private wealth clients across the region. And recent developments, we've seen an increase in hedge funds identifying DIFC as a credible jurisdiction for their location strategy. And as I said, as an asset manager, various activities are available to you. You can raise assets, you can actually manage portfolios, you can domicile local funds and products. And finally, turning to innovation, Dubai is really leading the way in the region, supporting innovation as part of that wider UAE digital strategy. And DIFC has, in the last 4 years, created the largest fintech innovation cluster in the UAE and wider GCC. We have over 500 plus tech companies across the fintech verticals, including open banking. And in fact, Tarabut Gateway, one of the first open banking solution providers in the region, is based in the DIFC. But we also have the enabling technologies, so cyber, digital ID, blockchain, and we have a number of low friction, low cost routes to becoming part of that community. And of course, our innovation hub is embedded in the wider community of the DIFC, the 32,000 people and 4,000 companies. And that really does give ready access to public and private funding. We're seeing a lot of interest from VCs setting up in the DIFC, to talent, and of course to market opportunities. So they have a ready-made cluster of potential clients, if you are a fintech or innovating company. And just finally, just to stress that actually our innovation hub is open to a variety of technology-driven solution providers, because we recognize that this is going to be an important component for the economy as it evolves in the UAE. So we see HR tech, legal tech, health tech, to name a few, being relevant, and we're here to support those types of entities as well. Thank you very much.
Thank you, Ali. Thank you for showcasing the existing role of the DIFC today, post-pandemic, especially with digitalization and transformation, very challenging topics. The DIFC is in an exciting space to be the agent of change, as you rightly pointed out, and to be leading Dubai and the UAE to be at the next high level or higher level. We have a very interesting question here. Now, given that, as you mentioned, there's a diversity of financial institutions wanting to come in, what would be the first steps to take if one is interested in further exploring, establishing in the DIFC? What guidance can you give, recognizing the diversity of financial institutions who want to come in?
Absolutely. I mean, I think my first and foremost recommendation would be to visit the UAE and see what is happening in reality, because I can paint a picture, but the evidence will speak for itself when you see it in reality. And from our side, we're very much here to support in that research and exploratory phase, to help you consider the options, to talk through the challenges and steps that you can take. And then we would also suggest that you look to work with legal advisors or compliance advisory firms as well that can support. But we can make those, we can facilitate those engagements as well. So really we are here as a resource, a consultative resource. We will cooperate and be candid and open in support of the business interests of each and every firm.
Yes, I could just define the D in your DIFC is dynamic, due diligence, and determination.
Thank you. Yeah, very good.
Thank you very much. Thank you. Well, ladies and gentlemen, we now have come to the panel discussion segment of the webinar. The panel discussion features experts from established banks and companies in the sector. And the theme of the panel discussion is the Singapore experience. And it is my pleasure to introduce the panelists for our Q&A panel session. They are Pankaj Nagraj, Managing Director, Senior Business Advisor, Bank of Singapore; Arun Kumar, Country Head, DBS, Dubai; Suvarna Sojana, Regional Head for Digital and Client Implementation, Middle East, North Africa and Turkey; Global Trade and Receivable Finance, HSBC Bank, Middle East Limited. Then we have Ansa Zial, co-founder and managing director, Merkle Trees and Emirates Chair, Access, Singapore Cryptocurrency and Blockchain Industry Association. And last but not least, Joseph Cletus, Head of Business Transformation, Lulu Financial Group. Now, please refer to the event website link shared in the chat window to browse through the profiles of all our panelists and speakers. Ladies and gentlemen, it now gives me great pleasure to hand over the proceedings of the moderator of the panel discussion, Dr. Brian Shager, President of the UAESBC, who is joining us from Calgary in Canada. Dr. Brian, please.
Thank you very much, Noor, for your kind introduction. And yes, I'm joining you from Calgary, 14 hours time difference between Singapore and Calgary. But it's a pleasure to be here and to moderate the panel discussion. You've heard a series of excellent presentations from very erudite speakers who by now I think would have given you a good overview of the attractions of the UAE as a leading financial center. And I particularly feel that asset management companies in Singapore, as Singapore is a very established asset management center, who are looking to extend their boundaries should seriously consider the UAE. Now, we are very pleased to have, as explained by Noor, panel discussion representatives from some very interesting organizations who have a lot of valuable experience that they can share with us in our interactive session that we're now going to embark on. I'm not going to introduce them because they have been introduced by Noor. The data is available in terms of the background, the CV, in the material of the seminar. I'm going to straight away ask them one by one to talk about their institution briefly. And I repeat the word briefly because, you know, we are always running out of time. So as briefly as possible to explain the institution from which the institution which they represent. And I will ask each of the panelists to do so. After that, I will start the interactive session of question and answers by posing several questions to each of the panelists in their respective sort of sphere of operation and expertise. And then I shall open the discussion to the other participants in this webinar. And I would like to first call upon Pankaj Nagaraj from Bank of Singapore to explain a bit more about the exciting activities of Bank of Singapore, particularly in the UAE. Over to you, Pankaj.
Thanks a lot, Dr. Shekhar. It's my pleasure to introduce Bank of Singapore. Bank of Singapore is a leading wealth manager in Asia with AUM of around $120 billion. We are a pure play wealth manager providing wealth advisory and investment advisory services to our clients. We have over 2,300 staff, including more than 420 private bankers of different nationalities. And we serve clients across geographies, especially in our key markets of Asia and Middle East. We are a 100% subsidiary of OCBC Bank, which is the second largest banking group in Singapore and Southeast Asia. We are among the highest rated private banks globally with credit rating of AA1, which is equivalent to AA+. We follow a completely open architecture model and work with a large number of counterparties and product providers. This ensures best of breed product selection and competitive pricing for our clients. We are the market leaders for the non-resident Indian market segment and are highly skilled in serving the Indian diaspora, both in India and outside India. I'm a senior business advisor with Bank's Global South Asia and Middle East market, and it's my absolute pleasure to be on this panel. Thank you.
Thank you very much, Pankaj. Indeed, Bank of Singapore has a lot to be highly proud of in terms of what you've achieved as a leading player in the wealth management industry in Asia and increasingly in UAE as well. I now would like to invite Arun Kumar, who's the country head in UAE and Middle East for DBS Bank, to say a few words about his operations. Over to you, Arun.
Thank you, Dr. Brian, and good day to everyone on the call. It is indeed a pleasure and a privilege to be on this forum representing DBS. Now, DBS is a household name for many of you from Singapore. I just thought I would take a couple of minutes to just take you through a few slides wherein I will maybe highlight some aspects of DBS that are probably a little lesser known, and spend a couple of minutes towards the end also talking about what we do in the UAE. So Huda, if you could move on to the next slide, please. A very quick summary on DBS. I mean, we are Singapore's homegrown bank. Some key metrics in terms of financials. We're slightly shy of 650 billion Sing dollars as of December 2021, which is marginally below 500 billion US dollars. Sorry. Income slightly shy of 15 billion Sing dollars, and net profit slightly shy of 5 billion Sing dollars. extremely highly rated. We've been consistently rated as the safest bank in Asia, and we have ratings of AA- and AA1 from S&P and Moody's. Globally, we are present in about 19 countries, and we service close to about 11 million customers. And we are also very strong on the sustainability theme, in keeping with our tagline of the best bank for a better world. Our achievements over the span of the last few years have helped us win a series of awards, some of which are kind of listed in the next couple of slides as well, which Huda, I will bother you to move on to now. We've been consistently winning Best Bank in the World award from the publications such as The Banker, the Global Finance, and Euromoney, all of which are pretty well-known publications in this particular sphere. And in fact, as the next slide will tell you, we were in 2020, we actually became the first bank to hold the best three honors at the same time. All three publications rated us as the best bank in the world, which was really quite an achievement in the industry. We've also won a number of awards in other spheres, such as the world's best digital bank, the world's best SME bank. On the wealth management side, our iWealth application was rated the top application of its nature by My Private Banking Research. We were rated the best PB Global Ally for entrepreneurs by Global Finance. So in summary, a spate of awards. And the other thing which makes us particularly proud as an institution was that, as DBS has pivoted towards becoming a bank that is able to best service its customers and stakeholders in a rapidly evolving world, our transformation journey was actually recognized by Harvard Business Review, along with such illustrious names as Netflix, Amazon, Microsoft, Tencent, and Alibaba, and so on and so forth. So again, a bunch of achievements of which we are very, very proud. Huda, if I could bother you to move on to the next slide. A very quick snapshot of the kind of solutions that we offer for our various clients. I mean, I will not spend too much time talking about this, but happy to talk to anybody who would be interested to learn more about these separately. And last but not the least, I also just wanted to spend a couple of minutes talking about what we do in the Middle East in particular. So Huda, if I could. So we run two businesses in the Middle East. We run a corporate and institutional banking business. Okay, to take a step back, we actually operate from a Category 1 license in the DIFC. We've been in the DIFC since 2006. Originally started off as a Category 4 entity, which is equivalent to a rep office. And sometime in 2011, we upgraded ourselves to a Category 1 license. So within the corporate and institutional banking segment, we cover a gamut of products and services in areas related to corporate banking, transaction banking, treasury and markets, capital markets, both on debt and the equity side, and in the areas of corporate finance and advisory. And in terms of our remit, we cover the 6 GCC countries over here. And the proposition that we really bring to our clients is that we help connect businesses that are the Asian businesses that are looking to come into this part of the world, and businesses from this region that are looking to go into Asia. The focus from a client segment perspective is predominantly on large corporates, government-related entities, and institutional clients, including banks and central banks. And our coverage team on the ground over here is really supported by our industry and product experts in markets such as Singapore and London, to be able to help us deliver the optimal solution to the client. And I just have one more slide. I also just wanted to bring out the fact that we also manage a private banking business out of our office in the DIFC. The focus is on high net worth individuals across the GCC and East Africa, and we offer clients a gamut of products with an Asian flavor to them. And some of our products essentially include things like investment advisory services, investment products such as equities, funds, fixed income, commodities, etc., and wealth planning areas. So yeah, thank you very much. And once again, it is indeed a pleasure and a privilege to be here.
Thank you very much, Arun. And before I move on to the next panelist, I want to make a few points which I think are pretty relevant at this juncture. We have two of Singapore's top banks are active in the UAE. And that should demonstrate to you, ladies and gentlemen, that the UAE is certainly a very major market for financial institutions such as DBS, Bank of Singapore, part of OCBC, and other banks, as you've heard from the presentations earlier on from DIFC and ADGM. So, and both these banks, i.e. DBS and BO and Bank of Singapore, have indeed established themselves very well in the UAE and are looking at strong trajectories. Earlier on, you heard about the presentation and the excellent sort of overview of the UAE banking sector given by FAB. And FAB is, of course, also in Singapore, operating in the region, like its Emirates NBD, which is the biggest bank in Dubai, which is also a member of the UAESBC. Now, what I also want to say to you is all the panelists are members of the UAE Singapore Business Council, and we're always delighted to showcase our very active members, such as those in the panel, in opportunities such as this webinar and other webinars that we organize in different sectors of the economy. So let me now move on to the next bank, which is not an indigenous bank like DBS Bank or Bank of Singapore, but nevertheless, a bank that has very strong historical roots in Singapore, and likewise, very strong historical roots in the Middle East, which is HSBC. And I'd like to call Suvarna to introduce herself and HSBC to us.
Thank you very much, Brian. Thank you very much. And firstly, thank you for giving me this opportunity. And indeed, it's a pleasure to be part of this panel today. I guess it needs no introduction for HSBC, but however, so HSBC is, as you may all know, it's a leading international bank, which was built of over 156 years of history, and then we are in the region for over 120 years. And this, all the history was built based on the stability, dependability, and innovation. And we operate in more than 65 countries, of course, as Brian said, including Singapore, and we have the deep roots in the Middle East region across all the countries that you can see on the screen. Today, what I want to share is basically, since from morning we have heard from many panelists and the previous speakers about digitization in their areas. So I felt it's appropriate to share our digital journey at HSBC and what we are doing in terms of specifically from a trade finance digitization perspective. And I'm sure you all agree with me, we are seeing a radical change when it comes from the world of trade. And more so ever, especially after the COVID, and then also because of the recent supply chain disruptions and also the geopolitical situations. And trade is one of the area where we have seen less digitization compared to the other areas in the banking. But over the last few years, because of the new technologies, the better connectivity, greater market acceptance, and also the regulatory changes that our previous speakers have spoken. So all these contributing towards the transformation of the global trade landscape completely into a new era of efficient, secure, and data-driven digital trade transformations. And I believe the main key drivers that are driving towards this digitization are the need for greater efficiency and speed, a need for enhancing safety and security, and to facilitate the new ways of trade, and also need for greater visibility across both physical and the financial legs of the trade transaction. And finally, not the least, the need for optimizing the financing and funding for the both ends of the trade cycle. And at HSBC, we are on the mission to help our clients navigate this changing landscape. And we have always been on the forefront when it comes from adapting or embracing the new technologies and bringing out the innovation solutions to help our customers benefit from this particular change. So the journey that we have actually started is we started this journey of transforming, rather digitizing the trade many years before, or rather few years before. We actually moving away from the manual and paper-based complex silo processing of transactions, and moving completely into new digital completely transitioning into digitization. And this is being possible currently today, which was not possible earlier, mainly because of the technologies that are there, whether it be AI, OCR technology, the connectivity channels that are coming in, or even the fintech evolution, bringing up the new solutions, the ability to transfer the title registry also electronically. And we are now looking ahead in terms of the new paradigms that are actually giving rise for the new and innovative trade propositions in line with the market evolution. So just to give a little bit on what's happening currently and where we are investing and where we are taking part from HSBC perspective. So there remain four areas where the main focus. One is basically digitizing the trade ecosystems. So as the previous speakers also has mentioned, so there's a lot that's happening around the trade, digitizing on the trade ecosystem, and especially with the blockchain initiatives and the e-bill propositions that are coming up, and also the AI and machine learning facilitating these things. So helping all the ecosystem members to come onto a single platform and to achieve an end-to-end automation, which was not possible earlier. And this is something that we are seeing now and happening now. And the second part is on the digitizing the corporate ecosystems. So even we are seeing actually the corporates taking lead on actually embracing the technologies, and especially to converge the physical and financial supply chains, like for example, the procure to pay. And then also the evolution of the fintechs and the third parties, where there are a lot of co-creation activities that's happening to connect between the buyers, sellers, and the banks, and also with the API technology that is coming and helping to integrate with various corporate core systems, with the banking systems, etc., and so on and so forth. And then the connectivity channels, like I said, like the APIs, whether it be Swift for corporates, the ERP integrators, host to host, mobile, so on and so forth. So if you would have seen, all these things existed for cash management perspective or the retail side earlier, but not significantly from a trade perspective. But today you see there's a lot of evolution that happened on the connectivity channels as well, even for trade financing. And then the last but not the least, basically the bank agnostic channel. So we are also seeing the fintechs. Actually, we are also partnering with fintechs and investing in the fintechs as well. And also we see a lot of fintechs also who are bringing in the value added propositions that are helping to move from paper to fully automated solutions. And then we are now, as I said, we are also looking at the future trends and investing in the future trends based on what, when, and where our client requirements are changing. So just to give you a few use cases and a few examples where we are also leading on is basically the e-marketplaces, embedding the financing within the e-marketplaces. So this is basically, to embed a quick advance payment for merchants, leveraging on the digital marketplace. And then also buy now, pay later is another example in the use case. Probably you would have heard of buy now, pay later, more prominent in the B2C space earlier, but now this is also becoming a reality in the B2B space, or rather we are seeding for the future, to more pick up on the buy now, pay later for B2B space as well. And the third is basically the ERP embedded financing. So this is basically embedding the financing solutions within the client ERP systems, so that, to make or give a better experience and better improvisation in terms of achieving automation right from the client ERP system itself. And the fourth one, the blockchain, which I have already discussed before. So basically, again, the blockchain significantly helping to move away and then also to connect all the ecosystem members onto one common platform, and also the e-bill solutions that are bringing into the ability to move the title registry electronically. So all in all, I think we are in exciting times, and so far has a trade digitization journey, and it's concerned for both where there is a volume and velocity. There's a change is immense, and at HSBC we are actually taking the leadership role, being the largest trade bank. So we are actually committed, and we are actually taking the lead on embracing all of these technologies and bringing in the new innovative solutions for the clients.
Thank you, Swarna, and I think you've demonstrated very clearly the unique strengths of HSBC in the area of trade finance, and also how far down the digitization road you have traveled and are, I'm sure, going to continue to enhance and move along. Thank you for that. I want to now explain that you've heard from the three traditional banks that everyone knows, established players, globally known, But then the banking industry, ladies and gentlemen, is morphed. You also have what is known as the non-traditional players. You have the shadow banking industry. And I read a statistic somewhere that the shadow banking industry now is about $53 trillion. It's a big chunk of the total financial assets in the world. And so increasingly, you are seeing the operators like fintech, for example, huge fintech players entering into the banking scene. So therefore, in this panel, we felt it would be useful to have a couple of interesting alternatives to the big international established bank that you've heard from, i.e., HSBC, DBS, OCBC Bank of Singapore. And so I would like to now invite Anson Zeal, who belongs to this new generation of fintech players to talk about these exciting developments in fintech that I think it's important for you to be aware of. Over to you, Anson.
Thank you, Dr. Brian. It's great to be here. Thank you for the invite. I think out of all the speakers, I would be the most realistic, yet at the same time trying to be regulatory compliant in terms of my contributions to the virtual asset sector. So there's a number of things that we do because it's so nascent. There's a lot of things that are doing through different entities. So I think I will speak from the contributions that I did rather than about one exact entity that I am with. Okay, so the contributions, for example, with Merkle Trees, which I'm a managing partner, we just started our first cohort working with a tertiary institution in Singapore to do a diploma in blockchain, which is one of the world's first technical courses that you will get from an approved institution. So this one has just started this month. So we have different interested partners that we're going to go into the next cohort. Some include from traditional banking sectors, the operators from PayNow, which is BCS. We have some guys from the traditional side that also wants to join this course because it's a very good skills conversion course. And one of the main Merkle Trees' mission is to fill the gaps. And one of the main gaps we're seeing are blockchain developers. And this is where we are trying to fix the gap by doing up this course so that people with existing tech knowledge can bridge quickly to the developers' background that have blockchain background and quickly, enhance the innovation in this space for both the crypto sector as well as the traditional sector. The other thing in my contribution was I was the former chair of Access, which is the first and foremost association, cryptocurrency and blockchain association in Singapore since 2014. My background in crypto, I started in 2013 when Bitcoin was $70. Okay, so the ups and downs, the 4 cycles of ups and downs of Bitcoin. People say Bitcoin will die, and then I've been hearing them more than 900 times already. So that I'm very used to. So with Access, our main aim is to work with MAS to make sure that they understand the benefits as well as the risks in the crypto and blockchain sector. So one of my main contributions for Singapore was working with MAS, which MAS facilitated this in consultation with the Association of Banks in Singapore, called the Code of Practice, which all the licensed banks, licensed crypto firms in Singapore are abiding by. So the Code of Practice will show all the stakeholders, including MAS and banks, what AML procedures they have, what KYC procedures they have, making sure that they do fulfill the standards as high as the FATF standards. As one of our main, our head of AML and in MAS also is in a high position within the Financial Action Task Force. Okay, so we're making sure that our Code of Practice adheres to that. So that was one of our main, my main contributions. Third contribution was I'm also the former chair of IDAXA, which is the Association of Associations. So Access is a member, Crypto Valley Switzerland is a member, Blockchain Australia, Blockchain New Zealand, and so on and so forth. Okay, so this was created in 2019 as when Financial Action Task Force created the first guidelines for the virtual assets in the sector. So one of the main things that we needed to tackle was something called, I'm sure all the banks will know well, called the travel rule. Okay, so travel rule means that both sides of the banks, intermediaries must share the information of their customers. And back then, it was very difficult. Unlike most banks where you use SWIFT to make international transfers, crypto, the sector itself can already do it without leveraging something on a SWIFT. So having the crypto intermediaries voluntarily follow the FATF guidelines was very, very difficult. And especially when an association like Singapore from Access or Crypto Valley Switzerland will go and talk to FATF, it's just not as powerful. So we all came together to form this international association called International Digital Asset Exchange Association, called ADGM. So one of our main contributions there is a yearly conference in collaboration with FATF to do a V20 during the G20 Leader Summit. Okay, this is really not just a normal conference. It is a conference to solve the immediate problems that FATF is seeing and the industry is seeing, getting two sides together to see what we can come up with in the actual summit. So for example, in 2019, once the guidelines came out, within 6 weeks, we held the V20. The main aim was to discuss how we can fulfill the guidelines of the travel rule guidelines. The main conclusion that came out was it was very difficult. Everyone had different solutions. However, the industry agreed that we will need to come up with a solution and the industry will work on it. Hence, FATF came up with a yearly assessment that sees how the industry grows. What came up from V20 was the standards that was sent between the intermediaries, and different compliance solutions also came up from that. So this year in Bali, we are focusing on the decentralized entities to see if there is a possibility for AML, KYC, and all these FATF processes that FATF wants to see. So just in summary, we're trying to work with regulators. That's one of my main aims, because in order for the industry to grow, we need the old money, so to speak, and new money to harmonize. Otherwise, the industry cannot just grow by itself.
Thank you, Anson. So, ladies and gentlemen, in Anson, you see this new face representing these exciting technological developments in the financial industry. Now, you mustn't assume that the traditional banks are not in the same space. They are very much in the same space, but then there are constraints that the traditional banks have. Some of the smaller fintech companies, etc., may not be constrained or encumbered with. So this is why you have this plurality of players in the industry that are exciting, that Singapore espouses, and so does UAE as well. The UAE follows, again, a very, very broadly innovative, adaptable financial sector and system that encourages diversity and innovation, technological infusion. So thank you, Anson. Last but not least, again, to demonstrate to you that there are other modalities, i.e. here you have in the form of Lulu, a company that is a huge conglomerate, well known for its supermarket, hypermarket stores in the UAE, that is moving into the financial space too. And they have opened an office in Singapore. So I have pleasure in inviting Joseph to introduce himself and Lulu. Over to you, Joseph.
Thank you, Dr. Brian, and good afternoon, Singapore, and good morning, Abu Dhabi. It's a pleasure to be here. My name is Joseph Cletus. I head the business transformation at Lulu Financial Group. To give you a brief, as the doctor said, a brief summary of the financial group, I request Ms. Huda to show a quick video on the holdings group, please.
Lulu Financial Holdings is an investment holding company incorporated in Abu Dhabi with an objective to invest in financial services and products to improve people's lives. As a holding company to our existing and new investments, Lulu Financial Holdings aims to simplify payment solutions through digital innovation and collaborative synergy with a strong focus on customer experiences. As of today, the existing investments under the holding company include Lulu Forex Private Limited in India, in which we hold 100% stake, Lulu Financial Services, NBFC in India, in which we hold 100% stake. Lulu Exchange Company LLC in Oman, in which we hold 70% stake. Lulu Money in Philippines, in which we hold 90% stake. Lulu Financial Services Limited in Hong Kong, in which we hold 100% stake. NS Cashpoint SDN BHD in Malaysia, in which we hold 70.83% stake. Mars Express PTE in Singapore, in which we hold 49% stake. Lulu Capital in ADGM, UAE, in which we hold 100% stake. And Pearl Data Direct, in which we hold 100% stake. With a bird's eye view of the business landscape, we at the holding company will be responsible for layering an operational framework that consolidates value for our existing and upcoming investments without involving in their day-to-day operations. By shaping strategies on matters related to sector R&D, audit and compliance, critical business decisions and governance. Let's play a more central role towards achieving our mission to enhance value of our investments by designing inspiring customer experiences built on technology and collaborative partnerships. Lulu Financial Holdings.
Thank you. Thank you, Joseph, for that video. And what I would like to do now is to pose specific questions to the panelists and subsequently open up the discussion to participants in the webinar. Let me start off with Pankaj from Bank of Singapore. Pankaj, I mean, Bank of Singapore's successes in wealth management in Asia are really unrivaled, and you have a lot to be proud of. But what is obviously another great success story is how you have expanded your wealth management operations in the GCC out of Dubai in DIFC, where I'm told that you even employ more people than UBS, which is something to boast of. Now, I understand your primary model is to attract liquidity from the Middle East, GCC in particular, into Singapore and the Asia Pac region. The question I want to ask you is, what do you think are the prospects of your Asian clientele, the Asian clientele that form your bulk of your clients, I expect, of viewing the UAE and the GCC as attract portfolio investments? Pankaj.
Yeah. Thanks, Dr. Shegar, for that question. No, you're absolutely right. We have a very strong and growing business presence in Dubai. We have a branch in DIFC for providing wealth management services. Dubai is one of the two major hubs, along with Hong Kong, outside of the Singapore head office. So it's a very important base for us. We have 130 people on the ground, including sales, product, compliance, risk, and finance teams. And we advise on very substantial client assets out of our DIFC office. We continue to invest heavily in developing our Dubai operations, with business growing exponentially over the last few years. And we expect the strong growth trends to continue for the foreseeable future. Now, you talked about the client segment and the focus of the business. We actually serve a broad mix of clients from our DIFC branch, including Arabs, Indian diaspora, and B2B clients. The amount of sophistication of Middle Eastern wealth has been growing, and we are capturing a fair bit of that business. So that's one. We also see a trend of wealth migration from Europe, which gets served out of Dubai. The Indian diaspora is a very important client segment for us, as we are the leaders for this client segment in the Asian wealth management market. We not only have a leadership in the NRI business, we also have a market leading and unique initiative to serve the Indian resident clients for meeting their offshore wealth management requirements. We see a very large and growing interest from that business segment. So from wealthy Indian families, we are seeing a lot of interest in migrating to UAE or setting up base in UAE. So that's another very big business segment. And this is actually, if you look at prospects, this is a direct result of the very liberal, progressive, and dynamic policies being rolled out by the UAE government. And we think we are still in the very early stages of this trend. We believe this trend will accelerate very significantly over the coming years. We think more Asian investments will flow into UAE assets like property, etc., but also more global investments of these clients from Asia being advised out of Dubai. In anticipation of these trends, we have developed products for the UAE market, specifically including lending against UAE shares, lending against UAE property. We are also leveraging our market-leading partnerships with the largest wealth managers in India to grow the Dubai-India corridor significantly. So to sum up, we believe strongly in the potential for exponential growth in both portfolio and business investment flows from Asian clients into UAE, and we continue to invest very heavily in Dubai to take advantage of the structural trend.
Excellent, Pankaj. I think it's a very interesting and enlightening response. And I must state that you are well poised, most certainly very well poised to benefit from that growth potential that you've just alluded to. I move on now. Thanks, Pankaj. I move on to Arun. Arun, DBS is by far one of the strongest institutional corporate banking institutions in Asia. And you know, we in the UAESBC, one of our primary objectives is to promote greater investment activity in the UAE among Singapore companies. Now, these companies and investors would, I'm sure, benefit from the strong, from the project financing advice support from institutions such as yourselves. And you have strengths in these areas. Now, what I would like to ask you is, from your experience, you've been, I know, in the UAE market for many years, if I'm not mistaken, for a couple of decades, and you are very well versed in that market. From your experience in the UAE and the Middle East, what do you consider to be the key risk factors that you could highlight that Singapore companies should be contemplating or focusing on before embarking on UAE projects?
Thank you for that question, Brian. And I will maybe just, if you would just allow me to digress a little bit from your question, I would like to look at it at a slightly more holistic level. I'd like to spend a little bit of time talking about the opportunities in the project financing space, and then what I perceive as some of the practicalities and the challenges, if I may. So I think the region has been very active in the project finance space. The UAE in particular, I mean, it's been within the GCC, it's been the most active country in this particular space. And the opportunities have really come about in three broad segments. I think one is the construction segment, one is the transportation segment, and the third is the energy segment, the oil and gas, renewables, and broadly spectrum. Now, the sponsors in all these projects, in most of these cases, tend to be, GREs, government-owned or government-related enterprises, and therefore the quality of the sponsor is very strong. And that in turn means that the projects are extremely competitive. You know, the bidding process for the project becomes very competitive, and therefore the cost of bidding becomes a very important criterion in determining who gets awarded the final project. So we typically, for most of the projects that come around, we see these large consortiums which get together and put forward their bids, and financing is clearly a very important element of that bid. Now, within the financing universe, I think a few things that I'd probably just like to make a mention of. I mean, this has traditionally been a market that has been dominated by the banks. Although of late we are seeing a few transactions where we're increasingly seeing structures such as bridge to bond takeouts and kind of thing. But as we speak, it still continues to be a very bank-dominated market. Project finance transactions typically tend to be long tenor, north of, depending on which industry it is, they could be north of 20 to 25 odd years. And therefore, one of the things that's happening is that the cost of financing is becoming increasingly important, because banks' ability to be able to lend for that long at extremely fine rates of interest, which is what the stature of the sponsor commands, is becoming increasingly challenged. So that's also one of the reasons why we're seeing a shift in some of these projects moving on to more bridge to bond kind of structures. Early days, but I do see this evolving as we go down the path in the coming years, especially with the demand for the kind of projects that are on the agenda. So I guess that apart, if you were to look at it purely from a project perspective, I guess it is an evolving landscape. Regulations do tend to evolve. We have seen a few cases where, let's say, the scope of the project does get renegotiated, as a result of which this would typically lead to time delays and cost delays and so on and so forth. And we have kind of seen a couple of cases where because of these kinds of issues and the fact that the sponsors tend to be extremely demanding, where we've seen a couple of cases where the projects have probably extended long beyond what the original game plan was. But again, we've not yet come across a situation where there has been a problem. Eventually, it's been kind of resolved. So I guess in some substance, it's a market that is evolving. It will continue to evolve, but it is one that presents significant opportunity to companies that are looking to come into this part of the world, including companies from Singapore.
Thank you very much. I think it's a very comprehensive response that you've given me. And yes, it is very competitive. I fully agree with you. And Singapore companies who want to be involved in project financing or investing in manufacturing facilities in that part of the world will have to do their due diligence very thoroughly and ensure that they've done such a proper due diligence to ensure the feasibility and the financial feasibility, particularly of the project, before they approach bankers like yourselves for financing. But I'm sure your experience and knowledge as DBS and the fact that you've been involved in the region for so long, the advice you can give them and the counseling and the inputs that you can offer to Singapore companies who are interested in the UAE will be indeed valuable, and that's why I felt your participation in this panel is important. Thank you, Arun. I move on to now Suvarna. Suvarna, you obviously are very into trade finance and in particular digitization. And I want to tell you that trade flows between Singapore and the UAE is increasing. So much so that last year there was a record year. Actually, bilateral trade flows went up to $21 billion, which is I think a record figure. Part of that increase was due to increase in oil price, of course, but the trajectory is good. We in the UAESBC are constantly encouraging Singapore SMEs, particularly, to explore the potential of the UAE market and the GCC, and of course, they will require trade financing facilities. And I just want to ask you is, you gave a very, very extensive sort of expose of the digitization process happening, trade finance. Can that help facilitate more Singapore companies to do trading, to do trade finance or get trade finance and get support from your banks like yourself because of this interesting innovation in digitization? Is that going to assist the financing of international trade or bilateral trade between Singapore and the UAE, in your opinion, Suvarna?
Absolutely, Brian. As you rightly said, so Singapore and UAE, given their strategic locations and the major hubs of re-export and financial hubs, there's heavy flow of commodities from east to Middle East and also Africa regions. And similarly, there's a reverse flow from on the oil and gas from Middle East to Asia Pacific. And with these are all actually heavily paper-based and manual, and then complex cross-border trade transactions are involved. And as you rightly said, to cope up with these spike in the volumes that we have seen post-COVID, certainly the digitization flow will naturally help the trade flows between the Singapore and UAE by reducing the trade cycle times. It will help for the trade activity to enhance between the two larger trade hubs, and especially with these new technologies like blockchain, the e-bills, and the even the national trade networks that are growing up. All these things, I believe that significantly will help both the Singapore-based companies and the UAE companies companies to increase in their trading activities.
Well, that's a very encouraging response, Savannah, and be music to the ears of our clients, or our members rather, who are participating in this seminar, because getting financing to support the increasing trade flows is a vital aspect of the business ambitions in the UAE, and if digitization is going to facilitate that, that's welcome news. Thank you, Savannah. I now move on to Anson. Anson, you, as I said, represent an interesting, emerging but very important sector for the financial sector industry, which is fintech, and the UAE has positioned itself as the largest hub for fintech growth in the region. There's so many illustrations I can give you. For example, the Dubai Crown Prince launched a 100 million venture capital fund this year to bolster startups and entrepreneurs in this sector. And in 2021, the fintech startups in the UAE achieved record high levels. There was a 550% growth of funding deployed into fintech startups. There was a 56% growth in number of fintech startup deals that were closed in 2021. And fintech accounted for 21% of all venture capital deals and 31% of all venture capital deployed in startups. And of course, 24% of fintechs in the region are based in the UAE. Now, Singapore has established itself already as a major fintech center with total investments of 3.9 billion last year. And therefore, we have a thriving fintech sector in Singapore as well. The question I want to ask you is this. In your opinion, and I know you have been looking at the UAE very closely over the past several months in terms of fintech, what are the attractions that the UAE can offer to Singapore fintech companies that would wish to diversify out of Singapore? And I like to suggest that the Singapore fintech companies should seriously look at the UAE, but you probably would know more. And I would like to know, what are your views on this?
Thanks, Dr. Brian. So I think one of the main distinctions between Singapore and Dubai, with this said, we will actually understand the point that I will respond to. So for example, Singapore right now, throughout its history, being a financial center and obviously a trade port is key and still key today. Meaning that it's important for Singapore to protect its financial status, its reputation, its high standards, being on the trying to be at the top of the top in FedEx non-grey list is key for Singapore, especially because Singapore, in terms of reserves, it's its own people and monetary reserves, whereas UAE, on the other hand, has a very mass amount of oil reserves, which they're trying to diversify away, especially Dubai. So by diversifying away also means that there is existing reserves, which if, just touch wood, if things don't happen in the fintech space just saying, there's still an industry that Dubai can still rely on. Whereas Singapore, in terms of its financial status, its reputation, once, as our Prime Minister has said before, we only have one chance. Once that is gone, Singapore is gone. So it's important that its reputation is kept. So what that means is that Singapore's standpoint for innovation is that they must protect the banking sector first before there is innovation that can happen. This mindset differs very, very differently from the likes of UK, where fintechs can run like the same as banks, can compete equally with each other. Dubai can also do the same. It's not as very protective relatively to Singapore of its banking sector. It's more pushing towards innovation, pushing whatever it can. So this thing, I think that's where it differs, where Dubai has a lot more room to innovate. However, having said that, especially with the financial space, crypto space, I'll speak more on the crypto side. It's important to advance innovation, be aggressive, yet be compliant. So when the news for the crypto sector, when Dubai came out with the news that it went into the grey list in the FedEx space, things started, even though there are companies moving to Dubai, the mindset is different. It's not like it's on the same scale, but I'm pretty sure Dubai and UAE will be able to fix that in the medium term. So it's important. Unlike Estonia, for example, another example, they were expanding too aggressively, and guess what happened? The companies got hacked. They didn't follow AML regimes. They started removing the licenses, and Estonia itself became a problem. The reputation is all wrecked in terms of the crypto licenses. Singapore doesn't want to be that. And I also want to, it would be great that Dubai also doesn't go into that trap of pushing too aggressively. So with that said, I can see why Singapore companies will move to Dubai. The engagement is definitely as strong as Singapore, yet because of its not needed protection of its financial status compared to Singapore, there's a lot more room for engagement between the two sectors. So these are the two main things that I see.
And I think it's a very good point you make, Anson. And Dubai, as you said, is very keen to innovate. But I like to think that there is also a strong commitment to the stability of the financial system. The banks are well regulated and supervised. And so I think there is, of course, this sort of this interesting coexistence that has to happen, and it is happening. But that is a work in progress, as you rightly say, and it's a very interesting sort of a tightrope to walk. You want to innovate, but you don't want to wreck the stability of the underlying financial system. And I think the points you raised are very valid, and the regulators have to be very, very conscious of especially the financial sector, protecting the financial sector in terms of disruption. Good response, Anson. Thank you. I'll move on to Joseph. Joseph, as I said earlier on, it is fascinating to see how the Lulu Group, a huge conglomerate in the UAE that is a household name in the supermarket, the food distribution chain, now playing an active role in the financial sector service, in the financial sector, in terms of what you've displayed in your video in different countries, including Malaysia and India, of course, and Singapore now that you've got an operation in Singapore. And what I would like to ask you, I know you are involved in strategy formulation and all that. What prompted your group to sort of move into the financial sector? And it is a competitive sector. You know that more than anybody else. And so that would be an interesting story for you to sort of very briefly tell us. And then also about your office in Singapore and your plans for the office in Singapore in terms of facilitating perhaps transaction between Singapore and the UAE. Joseph.
Thank you, Doctor. Thank you. So I'll just follow on the presentation of Ms. Suvarna. She had mentioned the embedded payments, how the bank is transforming themselves, right? So similar to that, we believe that every business has a potential to be a fintech, and large companies definitely will become a fintech, managing their own treasury, fund management, and even handling of payments, right? And players like Lulu, who serves millions of customers a month, there was a big opportunity to offer this payment solutions to our customers. We have seen the successful stories earlier with players like Walmart, Tesco, offering cross-border or cross-selling financial services to their customers. With this vision, we set up a standalone and independent entity called Lulu Financial Holdings back in 2008. This entity has investments in financial companies worldwide under the brand names Lulu Exchange, Lulu Money, Lulu Capital, and FinServe. Even to build such technologies, we have a standalone entity called Pearl Data Direct that caters to the technology services for the entire group. Now, this Lulu Financial Holdings has no dependency with the Lulu Retail Group. It is standalone. It is regulated in every jurisdiction and follows the regional and local compliance. It has a separate management team that functions. Now, when it comes to the Singapore, we see Singapore as a service gateway, a launchpad for our service offered as APIs. So in Singapore, we are launching a platform called Digit9 that helps financial institutions and fintechs to enable and quickly launch cross-border remittances to their customers. Now, we have seen when it comes to the traditional B2C offerings, companies that have adopted the mobile-first strategy have taken always a huge lead, be it when it comes to e-commerce, marketplaces, and even on the financial services. Now, when it comes to the cross-border payments, we saw a gap there. The traditional MTOs or payment service operators who support or behind the scenes offer the solutions to this fintechs or the B2C players were not ready or designed for mobile. Now, what Digit9 brings us with our a decade-old experiences, our learning, we packaged everything for a service consumption, be it building a correspondent relationship, treasury deals, currency conversions, last mile payments, or be it compliance or KYC, we provide everything as a service. We have partnered with innovative players in Singapore and the region to ease up the settlement and the cross-border needs. We are here strongly, and I'm repeatedly saying we are here to enable every business to be a fintech by providing everything as a service. Now, in a summary, it is like the whole payload is designed and built in UAE, but it is going to take off from the launch pad in Singapore.
Excellent. Thank you very much, Joseph. Now, ladies and gentlemen, fellow panelists, I think we're running out of time. You have answered all the questions very thoroughly, very robustly. I think we all learned a lot from your responses. There are a few questions which we'll respond to separately to the questions that have been posed in the chat group, in the Q&A chat. I would like to again thank you all for your kind contributions, your very thoughtful, incisive presentations, and of course, your very enlightening responses to the questions that I have posed to you all. And now I would like to hand the mic back to our efficient MC to bring the webinar to a close and invite our guest of honor, our patron, Ms. Lee Shan, to give his closing address. Thank you very much. Back to you.
Thank you, Dr. Brian, and esteemed panelists for your interesting, enlightening, robust, and candid ideas and responses. These discussions included, amongst others, products, systems, processes, strategies, people, and organizations in this rapidly changing and highly competitive, yet promising banking and finance industry in the UAE. So, ladies and gentlemen, to round up today's event, I now have the pleasure to invite the chairman of Business China, the patron of UAESBC, and our Singapore's former Senior Minister for Trade and Industry, Mr. Lee Yi-Shian, to give his closing remarks. Mr. Lee, please.
Thank you. Thank you, Noor, for your introduction, and thank you, Brian, for staying up at 2:30 in Calgary. I don't know what's the secret to stay awake in the middle of the night, but I must say this is a very interesting and exciting session. I learned a great deal from the various speakers. I think from the various sharing and remarks, we learned a lot about the banking and finance industry, which is going through a great transformation. For quite a number of years now, I think the industry is hiring more technologies than accountants. And as we see in this panel, we have the traditional banks, going through digitalization. We also have fintech companies, the upstart, so to speak, re-architecting the new infrastructure to facilitate the banking and meeting various sectors' needs. So I am very impressed with the various speakers. I'm also want to congratulate Dubai and Abu Dhabi for their respective efforts in positioning themselves as a financial center. So through the sharing of Dubai IFC and Abu Dhabi Global Market, I think their ambitions and their visions are very admirable. There's a lot Singapore can learn from them in terms of how they see the future and how their imagination and what they do towards their goals. For someone like me who have worked to improve Singapore and UAE's ties for a decade or more, I'm very glad to see many Singapore companies growing their footprints in the MENA region and also growing their operation with sizable staff and sophistication out of UAE and the GCC. I think it speaks a lot about the willingness of our companies wanting to internationalize and view the MENA market as an important and growing market for their growth and international expansion. Finally, I would say that UAE and Singapore are 7 hours away, and we cover a very different market and region, despite the fact that we are globalized. And I think there's a lot we can, a lot of market opportunities we can address. And we can't quite be as effective as Dubai, for example, and Abu Dhabi in covering the MENA region, because you are so much closer to the market and you have access to the talents and networks over at your side. And likewise, I think for Singapore to be a good partner for UAE, we obviously cover a good part of the North Asia, Southeast Asia, Australasia, and we have good access and to both the markets and the talents and the good vibes, in these markets. So I think it makes a lot of sense for two of us, both our financial center, trade hub, logistic center, to work closely together, especially in today's context. I think given the volatility caused by the war, disruption in supply chain, fast changing technological landscape, I think if Singapore and UAE work closely together, we can add so much more resilience, maybe even redundancy and stability in the financial system, that we are each very proud of. So I would say, the efforts today is tremendous, and I want to congratulate the Business Council for taking this initiative in a series of discussion, and today is focusing on the finance and banking to strengthen our links with UAE. So congratulations to Brian and the team of good people in the Business Council, and thank you all to all the various panel speakers and all the participants in this seminar. I just want to quote Ali Hassan of the DIFC. He says, "You must come to Dubai to see for yourself, what is real on the ground." And I think seeing is believing. Likewise, I was also encourage companies in the UAE to visit Singapore, and all this will take place when Brian organized the next delegation to the UAE. Thank you very much.
Thank you very much, Mr. Lee, also for your encouraging comments. I'm sure many share your views, and look forward to more collaboration, to quote you, with good size and sophistication. It makes sense for Singapore and the UAE to work closely together in this industry. Well, ladies and gentlemen, we've now come to the end of the UAE Finance and Banking webinar. And on behalf of the UAESBC, I thank you for your kind attention and participation. We welcome your comments and feedback via email to contact us at uaesbc.com. Much has been said, much has been done, but much more will have to be done and will be said. An exciting era to be in an exciting industry, in an exciting place, the UAE. Challenging, no doubt, but certainly promising. We hope you've enjoyed today's session, and we wish everyone in particular, also in the UAE, every success going forward. We welcome your comments and feedback via email to us. We have to stress, we will try and answer as much as we can. And meanwhile, until our next event, thank you all and stay safe.